Um, I see a lot of people in panic. I feel great. I feel great. I live my life profitably. I run a profitable business. I stack sats every day. I try and remain humble, and I expect the volatility. I expect to scare you out, wear you out. So it's a good day to be stacking sats. It's a good day to be stacking. I'm going to go to bed richer in Bitcoin terms than I was when I woke up. That's a good day. So I always find this funny as well, in that, I don't know why the market is so distressed. I think this is a cleanse, a cleaning of those that aren't deserving to be here.
Hold tight, because the crypto world is turning upside down. Jack Mallers, the bold CEO of Strike, has exposed the so-called Bitcoin crash as a calculated move to shake out weak hands. In a shocking revelation, he claims this dip is merely a setup for an explosive 10 times Bitcoin rally. On a recent episode of the Money Matters podcast, Mallers dissected the market chaos, revealing it as psychological warfare. According to him, this turbulence is a test in the true believers will reap massive rewards. Popular crypto analyst Vijay Boyapati also weighed in, warning that we may face months of uncertainty. However, he emphasizes that Bitcoin has always battled political resistance, and the shifting landscape could signal major changes ahead. So, is this just another shakeout before a massive breakout? Let's dive into Mallers' insights and uncover the real story. Don't forget to like, subscribe, and turn on notifications for more updates.
Bitcoin in the last 24 hours is down 3.3%. Ethereum is down 10%. Ripple is down 10%. Solana is down 14%. Are we surprised on this show? No, not at all. All of these things are meme coins. There's no long-term value accrual to these things. They are not money. They are failed technologies at best. They are arbitrages on the trend. Okay. Bitcoin goes down. These things are going to go down even more. These things are getting absolutely demolished against Bitcoin. And it kind of goes to show which project is legitimate and which isn't. It doesn't impress me when everything's inflating against the dollar that you're inflating as well. What impresses me is relative strength against Bitcoin. Is there anything in the world you'd rather own than Bitcoin? And here's another example that answer is a resounding no. No. Not even no. Not even close. Like, wouldn't fathom owning any of these pieces of shit ever. So I don't know. I mean, I see a lot of distress on the internet. I see a lot of people in panic. I feel great. I feel great. I live my life profitably. I run a profitable business. I stack sats every day. I try and remain humble, and I expect the volatility. I expect to scare you out, wear you out. So it's a good day to be stacking sats. It's a good day to be stacking. I'm going to go to bed richer in Bitcoin terms than I was when I woke up. That's a good day. So I always find this funny as well, in that, I don't know why the market is so distressed. I think this is a cleanse, a cleaning of those that aren't deserving to be here. One of the things I thought was interesting is MicroStrategy and Saylor bought Bitcoin today. Let me pull up his actual announcement. So Saylor closed a $2 billion convertible note offering at a 0% coupon and 35% premium. So just so everyone is aware, what that means is he's selling to fixed income investors, and he's selling a note that gives you 0% coupon. It means how much do you make annually by buying this note? You don't make anything annually, 0%. And the premium is 35%. So when do you get the option to convert into stock? 35% higher than the stock is trading today. And so he does this because at that 35% conversion, at that 35% premium, that's higher than it is today, where if he buys the Bitcoin, that's what he means when it's accretive to his shareholders. He calls this BTC yield. So he took the $2 billion and he bought 20,356 Bitcoin MicroStrategy now has over 499,000 Bitcoin. They've purchased for about $33.1 billion, which gives them an average Bitcoin price of a little over $66,000. Now, what I thought was interesting is that the market did not necessarily appreciate it. MicroStrategy is down on the day. And I really think the interesting thing about this is I don't think that the public markets necessarily understands MicroStrategy and understands these businesses that are trying to build towards a Bitcoin standard. Because if you're pricing MicroStrategy on was this transaction accretive? Basically, it's where's the growth? Where are you valuing the growth? If you're valuing the growth on like an EPS, earnings per share, or a lot of this old fiat garbage, then it doesn't really make a lot of sense. If you're valuing the growth on are they adding more Bitcoin than they are diluting, right? Then MicroStrategy grew today and they continue to grow. And if you run rate their growth, it's very impressive. So I just thought it was kind of interesting, a subtle point that Saylor could have bought $2 billion of Bitcoin and the market didn't appreciate it. To me, it tells me a few things. One, the market doesn't understand these businesses, this idea of building towards a Bitcoin standard versus a fiat standard. The public markets don't know how to price it, don't know how to price multiples, don't understand how to value its growth and where to find the growth. Just totally like nobody knows. Not saying it's anyone's fault, but the efforts to communicate this to the world have not worked. That's it. That's, spade a spade. That's number one. Number two is that MicroStrategy seems to be trading much more correlated to Bitcoin than it is to its growth and acquiring of Bitcoin. And, Saylor talks about they're a refinery, they're a Bitcoin refinery. They refine, the Bitcoin energy and volatility and stuff. And so I found that interesting as well, because that goes against the notion of this premium. And so MicroStrategy, I think, is down 50% this year. So its stock has been cut in half, something like that. And Bitcoin's only down 15%. And so it goes to show, again, there are pros and cons to holding Bitcoin and holding MSTR. I don't think the world fully understands MSTR and all these other companies that are doing this thing. They don't know how to price it. They don't understand where to find the growth and how to value the growth, how to put a multiple on the growth.
Backing his claims, Mallers points to key industry players making bold moves. Take MicroStrategy's Michael Saylor, who recently increased his Bitcoin holdings. Yet, despite such bullish actions, the market remains eerily indifferent to disconnect that smart investors might exploit. As the dust settles, one thing is clear. This crash might be a carefully orchestrated illusion, designed to deter newcomers. But for those who can see through the fear, a golden opportunity awaits. The stage is set for a potential Bitcoin surge. Will you seize the moment or be left behind? Let's hear more from Jack Mallers.
Ken Griffin and Citadel came out and said they want to get in the crypto game. They want to make markets. They want to be part of the liquidity profile. They want to launch crypto businesses. People were asking me about this. I don't know what opinion the world wants. Duh. My dad once said, Bitcoin is like universal acid. It seeps through the cracks, and whatever it touches, it finds a way to conquer. And so what I think is interesting is, no duh, Bitcoin is going to find a way into the US government, into Wall Street, into the biggest proprietary trading firms, hedge funds, high frequency traders in the world. Am I surprised Ken Griffin is into Bitcoin? No. Is Ken Griffin surprised he's into Bitcoin? Probably, right? That's what I would have to say about that. This is growing to become one of the most liquid, saleable global markets in the world. That is Bitcoin. Markets are really truth-seeking machines, and Bitcoin is the most truthful, accessible free market in the world. It has intrinsic value in that way. On a Sunday night, it's the only way for humans to express themselves with time and energy. That's insanely valuable. Now we're under $2 trillion in market cap. but you're talking about a global market that's around, it's more than a tenth of gold at this point. What's gold's market cap? It's more than a tenth of gold. So it's approaching gold levels, global, saleable, liquid, 24/7, free market. So I don't know, everyone wanted me to talk about Ken Griffin getting into Bitcoin. I'm not surprised by Ken Griffin getting into Bitcoin. I'd bet you Ken Griffin is surprised he's getting into Bitcoin. And that says a lot more about Ken Griffin than it says about Bitcoin. The Bybit hack, the funniest thing about the Bybit hack is the fact that there's an active conversation in whether Ethereum should roll back the chain, especially because there's supposedly, Korea or something that performed the hack. So it's just, again, these things aren't distributed. They aren't decentralized. They don't perform any functional purpose. They hardly work. They're overly complex. They are narrative driven. They're not functionally driven. There's no value accrual. And the fact that there was a hack and we're all sitting on the internet asking a central group of people if they should roll the hack back. I'd rather, if I had to choose between Jerome Powell and Vitalik Buterin, I'd take Jerome Powell, honestly. More credible, more experienced at managing monetary policy globally. Who the fuck is Vitalik Buterin and what gives him credibility of being a central bank? I don't know. But that's how we're treating him. Hey man, should we roll this back? It's what? Ridiculous. So I don't know. The Bybit hack was embarrassing, pathetic, validating. Someone asked, what if Bybit had been hacked for Bitcoin instead of Ethereum? There wouldn't have been a conversation about rolling back the chain. Is what it is. So, the mere fact that we're talking about rolling back the chain tells you everything you need to know about Ethereum, which, I'd have far less of a problem if they just owned it and said, hey, we're a centralized technology company named Ethereum. And if you have requests like rollbacks, just let us know. Be all right, well, at least we're being honest, ethically honest here. But it's when you say we're decentralized like Bitcoin, we're the better version of Bitcoin. It's ridiculous. It's who are you trying to fool? First question, what do I think about the centralization of mining pools? I think it's a legitimate risk. I think we're working on the risk as an industry. I think there's a lot of cool things like Ocean. But I think mining, it always has been one of the more interesting threats to Bitcoin and centralizing the asset. And I think it's a risk. I think there's a lot of work by Matt Corallo people should take a look at. I think everyone should take a look at what Luke Dash Jr. and what Ocean is working on. Now, is that risk life-threatening to the project? Does it need everyone's undivided attention today? You can make some arguments where you sit on the spectrum, but I think generally speaking, no. I think the industry needs to fund research and development to address the issue that is centralization of mining pools, 100%. Do you ever think of a potential of blockchain tech to tokenize assets, for example? Bitcoin is perfect money. There's nothing close, but I think a few other chains have some utility in the future. I do not think that at all. I also don't understand the value in tokenizing an asset. What does that do? Let's just be clear about something. The utility of the Bitcoin blockchain is a distributed database, a distributed ledger of who owes what to whom, of who has what money. The implementation of the Bitcoin blockchain is running the best money ever. I've never seen a blockchain be useful for any other use case. What would putting a banana on a blockchain do for me? Or a stock? Why would a stock on a blockchain be any better than a stock on a MySQL database? Seriously, what's the answer to that question? I literally don't know. It's all salesman garbage. And here's another thing. Would you be interested in putting a asset on a blockchain if you couldn't buy a token associated with it. The only point of perpetuating all these ideas is to sell a token.
Bitcoin has dropped over 21% from its all-time high of $19,300, now hovering around $887,500 as of the 26th of February, 2025. The market is bleeding, investors are panicking, and the big question is this the end or the setup for a massive rebound? Some analysts suggest Bitcoin is testing critical support levels, similar to past patterns that led to massive rallies. Others warn of further declines, with technical indicators pointing to possible drops to $76,390 or even $57,600. Meanwhile, US spot Bitcoin ETFs have seen nearly $1 billion in withdrawals, fueling fears of an institutional exit. Standard Chartered's Jeff Kendrick warns that the big capitulation may still be ahead. Mahlers believes the financial elite is desperate to suppress Bitcoin before it reaches mainstream dominance. With rising inflation, political tensions, and market uncertainty, is Bitcoin being manipulated? So, will Bitcoin defy expectations and stage a historic comeback, or is this just the beginning of a bigger collapse? Let us know in the comments, and don't forget to like, share, and subscribe for more updates.